Hello out there and good morning, traders. It is March 18th, 2024, and welcome to the Apteros Daily Market Insight. Let's take a look at our recap from Friday here. So, as we were kind of prepping our levels from Friday, we were essentially kind of getting into the prep right around here-ish, and we had a dissonant picture across the board on Friday. We had a bullish set of time frames and a bearish set of time frames. So, one thing that we could say about what was going on is that we could sequence the events of what was happening in our DMIs. In other words, the bearish line in the sand was in play as we were coming into our session, and we were looking for a deeper move to the downside heading into this bullish zone. And essentially, that's exactly what we got. We got the break to the downside coming into the open, right into our first neutral target here. We started to look like maybe an inflection was possible, a full breakdown right into our line in the sand. This is where we started to see opportunities to get long for the rest of the session, right? In here, a nice inflection out of our line in the sand area, decent move back into a neutral zone, a little bit above there for some extra MFE, but never really regaining full bullishness to go all the way out and back up into this bearish area. Pulls all the way back, gives us a chance again to start looking for longs in inflection areas and getting a nice move back into that neutral zone as well. And then, of course, the overnight session and weekend here have been pushing back out of that bullish area, which is coming from a little bit more of higher time frame stuff. So that's what we're paying attention to here. Overall, we kind of nailed this DMI, had the early morning move to the downside, had the inflections coming back out. Really great DMI for us, and just solid prep. So now here we are looking at today's prep. Very similar in terms of the way it looks, with two different zones. But definitely interesting nonetheless for us to pay attention to and take a look at the different scenarios for today. The difference with today's DMI as compared to Friday's is the sequence of events. In other words, on Friday, we were already at a bearish area and heading to the downside. Today, we find ourselves at a bullish area and heading to the upside. So it's a subtle difference, but there is a difference here. Because at this point here, we're looking at destinations on the upside for a couple of different time frames. So as we head up into this bearish zone, those are destinations for different trade ideas within our Nadro framework. Once we get to this bearish area is definitely a hurdle for us to clear for any more bullish continuation to the upside and possible stretch targets heading out of here. So that's just an overall picture of what we're seeing in the DMI here. Let's talk about different scenarios. So our main line in the sand and main trade idea is the one that's currently in play right now. Scenario 1 being a hold of our lower line in the sand, continuing into this bearish area here. If this bearish area breaks down, we see continuation to the upside. This would be a further move with scenario 1, heading up into the 52, 52s, and there are some stretch targets even higher. If we clear out this neutral zone, so looking at this if we break down this bearish area, this would be our first neutral target. From there, we're looking to the stretch target up here around the 5,300 area, and that would kind of be the end of the line for what we're expecting out of the bulls if they take full control of this market and clear out this particular bearish area. All right, so that's where we're at right now. If you're looking to the downside, well, the bears hold this zone. It continues to sell back off, and we get down below our line in the sand here, which would be scenario 2, a full breakdown of everything heading into that reference there, and then a stretch target even lower at the 5104 or something like that. And that would kind of be scenario 2. But from where we're at in terms of price, that's a pretty big move, pretty considerable. So scenario 2, a little bit more of a stretch, but definitely wanted to cover both scenarios with our line in the sand here. All right, so that's where we're at right now with that particular trade idea and that particular line in the sand. We are in open space, down from this line in the sand, okay? But that is the current trade that's in play right now, and its overall destination, with some time here, let me scrunch this up. The overall destination of our trade from this line in the sand along with scenario 1 is up here. So we have things in the way that we have to get through to continue to the upside to get to that target, right? So these are things that can disrupt our analysis. They can disrupt our overall trade idea moving for the bulls. So taking a look now at this upper area, what's going on here? Well, we definitely have a bearish area based on another time frame that has an opposing trade idea. So what that means is right now we are sitting in a dissonant section. In other words, we have a bullish idea at play, we have a bearish idea or state that is also at play. So we have two different time frames kind of fighting out. One of them eventually has to win. Right now, our main trade idea is coming from the bull side of things, so we have to wait and see if this line in the sand fails or not. Right now, the what is picture is that it's not failing, and scenario 3 would be a hold of this section and a sell off from here, coming back down possibly into our line in the sand area, but definitely paying attention to neutral inflections, neutral levels as we, sell off. If that's what happens, if we start holding in scenario 3, our main target for that would really pretty much be this one around 51.91. So our main sell-off target would probably be around that 51.91. There is some consideration for even a move a little bit lower down into here for that line in the sand if the market does continue to move lower. So that's the overall plan with scenario 3. With scenario 4, which is, kind of 4 and 1, right? 4 because we had scenario 1 with continuation. We see a breakdown of our line in the sand and continuation of the upside. That would be our first real main target there for scenarios 4 and 1. In other words, the break up from this line in the sand, the continuation of this trade idea from this area down here. And of course, if we get above this neutral level here and continue to press, this market has a lot of open space to the upside. So, we might get up to this stretch target. It might just, push a little bit higher and fizzle out. It's a long way to move, for the ES. So you have to consider things like rhythm, general expectations of range for days and things like that. Now, we don't ever set expectations on that because every day is unique as we approach it from our context and narrative perspectives, and then we just kind of trade what's presented to us. And I want to keep that, at the forefront of what we're talking about here. So, as with anything here, a little bit more of a complicated DMI because we do have dissonance, right? We have zones we have to pay attention to. But the general way that this looks, the general outline is, we stay in this zone here based on these two lines in the sands, right? If they break, that's a shift in either direction and something that we really need to pay attention to. Otherwise, it's more of the same for us in more kind of wider rotational behavior, if that makes sense. If we do see the shifts, that's where the bulls can take control of this market or the bears can take control of this market, and we can possibly see some pushes to the upside or downside. All right, trade well out there. Mind your process and risk. Let's have a great trading day.